India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, middle of the week, and it's a quiet kind of screen out there in the US in terms of the global picture. It was the same way when we started yesterday. It's the same kind of picture this morning as well. But here, there is a bid at lower levels, but there is also some selling, which comes in at close to the prior highs. I'm Prashant. With me, my colleagues, Nigel and Survi. Guys, hi, good morning.
Hi, good morning. Nigel must say, well done. You're brightening up our day and our screens as well. So, Wednesday, this is exactly the kind of push we need to get through the second half.
In the pink of health, and I have no role to play in this. So kudos to our designing team. So happy to be there.
Maybe this is what we need to get over. 2 days missing those highs.
Tell
this
me
is the
tomorrow.
Kind of spunk that we
tomorrow, what's the color? that's the theme.
Anyway, well, it's looking nice. Let's just quickly run you through what you need to know as far as the trading day is concerned. You basically have the market in the US, which had very, very quiet session. I'm talking about the overnight sort of day. And the same time yesterday, I was saying that it was the quietest day in terms of volumes for the US market. YTD, guess what? Last night was quieter. It was both on the cash side and option side as well. It was very, very quiet. The trade setup will start to come up on your screens. The Nifty here in India has been absolutely flat, but it's been up for 9 consecutive sessions. Slow, steady, 20, 30, 10 points, 40 points. It's been that kind of a crawl up for the last 9 sessions now. So, it's quietened down and it's not such a bad thing. US equities, very low volumes once again, as I said, both on the cash and option side. S&P about 0.16% higher, the NASDAQ about 0.17% in the green. You had the 10-year yield, which was up about 2 basis points at about 3.82, again, 2, 3. Very small changes. But the big change, of course, has been coming through in the dollar index. And the dollar index is down to 100.55. It's broken, multi-year supports at the 100.7 kind of levels. What can I say? It's a function of a variety of things. The euro has got the largest weight in terms of when you look at the dollar basket, currencies which comprise or make up the dollar basket. The euro has been rising. And of course, it's putting a bit of a bid for the JPY as well. So you look at the USD JPY is back flirting against the psychological support of the 144. We got to 142 recently. We're back at, and we'd rallied from 162 to 142. And we sold off to about 146, 147. We're back at 144 now. NVIDIA earnings later tonight. I think that's the big one, which global markets will be watching. It could be a material event, one way or the other. The thing is, NVIDIA is really at the heart of the AI theme, which has been powering the US markets higher. And can it really meet lofty expectations? That's the big talking point. And I think we will hear from Jensen Huang, the founder of NVIDIA, the CEO, a little. Of course, post the earnings as well. There's a conference call, etc., which usually happens. But that could set the agenda for global markets as we come back tomorrow. If, of course, it's a miss or it's a beat. Now, oil prices, again, it's a bit of a flip-flop. We had a 3% surge day before yesterday, and we gave up 2% of that last night. And so we are back at about $80 a barrel. Not very much to read there. So just to circle back and talk about the levels, and I said this yesterday as well, ignore the US screen. And I said this when the US was down because it's kind of very, very lackluster. Volumes are very, very low. So you got to do the same thing today as well. So you're in a way trading off of the own steam. Now, above the all-time high, we, by the way, got to about 25,073. So practically there. But essentially, once you take out the 25,078 level, the next target is the Fibonacci retracement, which is 25,500, 530 to be precise. Supports come in at the hourly average, which has moved a little bit, 25,858, and the 20-day, which has moved very little, which is about 24,562 as of yesterday's close. Nifty Bank is rising gradually. It's lacking momentum, but it is rising gradually. By the way, yesterday closed above the falling trend line, and that is a good thing. 51,150 around was that level. and the Nifty Bank can target the daily upper Bollinger Band, which is 51,855. And supports for the Nifty Bank come in at the swing low, which is 50,856. So, I mean, that's essentially the picture. Levels have changed a little bit, but the setup has not really moved that much. We remain kind of ranged. And I think later today, the NVIDIA numbers, tomorrow the Reliance AGM. But I think NVIDIA, of course, is the bigger market-moving global event, which will be important. I mean, it's as flat as they come. Half a point change lower on the GIFT Nifty. Surabhi.
Well, Prashant, yeah, absolutely. Actually, looking at the Asian performance, maybe this flat sort of indication on the GIFT Nifty is not too bad because some of the Asian markets, they're down quite a bit. Hong Kong, for instance, is down about 0.7%. So there's, in general, consolidation, but with a negative bias across Asia as markets wait for that major NVIDIA print. Remember, it comes in after US market hours today. So the reaction won't show up, during trade. It's going to be post hours when we get it. And it's NVIDIA, obviously, that we'll discuss at length, tomorrow. And then the next Friday is the big one, because that's the September jobs report. The 6th of September is when the non-farm payrolls data comes out. And remember, it's been all about the Fed being data-driven. So the extent of the cuts and what happens, we'll get to know more. But, talking about sort of some of the other asset classes, there's been a lot of volatility in cryptos, by the way. A lot of selling last night, 6% down on Bitcoin, about 8% down on Ether. So, commentators are saying that maybe it's just some healthy unwinding of leverage positions. But, it was interesting to note the volatility there as well. Oil, of course, is now coming back towards, just below the 80 range. So let's see if it can actually hold there. The market's hope is on oil that this Libya output shut, this is going to be very short-lived. It's just, a lot of political rhetoric that will settle. On that hope, we are seeing a bit of a climb down from the price of almost 81. Back home, the critical question is whether we can get third time lucky here for the Nifty, because in the past two sessions, the index has been getting very close to the all-time high level, and then we get into a wave of selling. That happened yesterday when we were just 6 points shy of the mark, and then the selling came in. What will be critical to note is whether the financials can continue their up move and their march ahead, because yesterday it wasn't really about the banks, it was the non-banks, and big stocks like Shriram Finance, the Bajaj Twins, etc., all of them were up and about. So let's see if that can continue or not. Fund flows, FIIs are buyers. They've bought equity worth about 1,500 crores in the market yesterday. Cash markets, domestic institutions on the sell side again. So flip-flop. The previous day was a buy figure, but not sustaining into a buy. Sell of about 600 crores. Just in terms of individual action, I'll watch out for the PSU space, particularly NBCC, because it's sort of giving some news and some buzz over here. The company's going to be looking at a bonus issue. So perhaps that gets a bit of the trade going back on the PSU side. And guess what? This is not for today, but something to keep in mind, and we'll discuss this as we go forward. Will we finally see the NSE IPO? Is it going to see the light of the day? Well, yesterday was again one step forward. That is the NSE board deciding to submit an application to SEBI to get a NOC, a no objection certificate. Remember, the NSE had asked, SEBI had asked NSE to pull out the IPO in 2019, then it went into a cold storage. So this time, are we going to see a revival? We'll get you more commentary and more thoughts around this as we go forward. But overall, the setup, a bit of a caution, but maybe, getting third time lucky today. That's what the bulls will hope for, Nigel.
Well, let's see whether or not that happens, but it appears that today could be the day.
Yeah, so it's the color.
The Nifty will try yet again to hit those fresh all-time highs. Last couple of days, we've been flirting with those all-time highs, but today could practically be the day. And if that has to happen, then the Nifty Bank that plays out its expiry, that'll be the factor at play in today's trading session, and that's going to be the swing factor for the day. I'll tell you a little bit more about that in just a bit. What about overnight? Well, overnight, as you'll mention, NVIDIA is something that we'll be looking forward to. The FI position should come up for you in the screen, and this is something that I don't really like, actually, because the FI positioning on the long side is moving towards that 1 lakh contracts odd. I prefer when there are more shorts in the system, like we saw a few sessions ago when the markets were net short. But for the time being, that's a data point that will take close to 90,000 contracts on the long side. Net positioning of the FIs. The client positioning has absolutely flattened out. They were net short, they moved into net long, and now it's as flat as can be. FI positioning, well, it's close to around 58% of their positions, in percentage terms, that are on the long side. And that's the highest, actually, we have seen all the way since August 5th. So that's the FI positioning. The client position should come up for you. It's as flat as can be, not long, not short, just flat as we speak as well. Well, let's move to the options data then. Getting into the expiry, tomorrow there will be the monthly expiry that will play out. And two strikes are very active. And sometimes getting into the expiry, you see a short straddle that takes place. That's the same strike. You write the call, you write the put, and you pocket the premium. And the rough premium, the average premium could be around 180 rupees odd. So 180 plus 25,000, 180 minus 25,000. That's a short straddle. So the broad range comes up for you on the screen. On the downside, 24,820, well, that appears to be the support zone going by the options data. And resistance will come in at around 25,180. So, it appears the traders are playing for a bit of this range. But the Nifty Bank, that plays out its expiry today, and it's going to be interesting. And that's going to be the mover today, because the rolls are much lower that we're seeing in this contract in comparison to the same time on an average for the last 3 contracts. Much lower this time around, indicating there's a fair bit of action still in store in the Nifty Bank. But it's facing resistance at around this 51,300, 51,400 level. Even yesterday, intraday, it went past that 51,300 mark. Towards the end of trade, it ended below that 51,200 odd mark. So if you just pull up the chart that we've been talking about for the last few sessions, the 20-day MA, it's stuck in that very, very tight range. The 20-day MA on the downside, that's the support zone. You don't want that to go. But on the upside, you wanted to go ahead and take out this 51,300, 51,400. That's the mover of the day. If it finds its form, we're at fresh all-time highs today.
Well, it's just a matter of, it's a hop, skip and jump. Not even that. You're there yesterday practically. So it's possible we get to that today. Well, let's just quickly run you through some opinion now. We have Mark Matthews joining in of Bank Julius Baer and Company. Mark, great to have you with us here on the program. Good morning. Let's just start with this NVIDIA business overnight. How important, they say the heart of this AI global theme, how important are the earnings going to be for markets in your opinion?
Exceptionally important. And I can give you a little idea of what they might look at because I think the two main things to look at are the orders that NVIDIA has been giving to Taiwan Semiconductor, which makes NVIDIA's GPUs, and then how are the suppliers of NVIDIA doing? And so what I can tell you is as of the end of June, NVIDIA's purchasing commitments to Taiwan Semi were up 175% year on year. So that's a very good number. It's probably gone up since then. And then as far as the suppliers go, one important one is called Fabrinet. They make optical cables for NVIDIA. And their data communications business was up 120% year on year in their second quarter results. And they said the third quarter will be significantly stronger. So I think that NVIDIA will come through with very good actual second quarter numbers and guidance. But I must say that our fair value price target for the stock is $135 per share, which is only $8 higher than where it is now. $7, excuse me.
Okay. Mark, hi. Good to be speaking with you this morning. I was just looking at the NASDAQ. Fantastic run, right? 30% in the last 1 year, last 12 months. And I was wondering, it's tough to beat that kind of performance. But then, hey, I forgot. I checked out our very own Nifty 50 here in India. And guess what? The Nifty is also up 30% in the last 1 year. So it's been a phenomenal ride for equity markets around the world. But on U.S. technology, whatever NVIDIA says or doesn't say or delivers or doesn't deliver today, there's been some sector rotation out, but it's not become very definitive as yet. Do you expect any major portfolio changes, or do you expect this tech rally to last, into the end of the year as well?
We expect the technology sector to continue to outperform, and the key will be that over the next 6 months, the big players, the Magnificent Seven, start to monetize artificial intelligence. Well, clearly NVIDIA has already done that, but we'd like to see it from Microsoft, Google, Facebook, etc. Now, we think that is going to happen. We think they will be showing very material pickup in actual profits from artificial intelligence. And by the way, I think you could say the same for the entire U.S. corporate sector, maybe not over the next 6 months, but over the next 12 months. We're going to see a lot of real stories of AI helping businesses become more efficient. That's our belief. And if that's true, then I think that the technology sector continues to do well. I do acknowledge what you're saying, that there has been some rotation into more cyclical sectors like financials, like real estate. But the structural growth of the technology sector, we believe, is still going to remain very strong, and therefore it's still where we would want to have the bulk of our portfolios invested.
Hi, Mark. Good morning and good to see you in. What do you make of the growth market, that's the Indian market, in comparison to the value market, the Chinese market? It's trading at reasonable valuations, but there's a toss-up now, between India as well as China. Which side are you leaning in the near term? In the longer term, I'm sure it's India, but in the near term?
It is India. Near term, I must confess that I thought this was going to be a good year for China, and it's not panning out to be that way. But we're only in August, and I still think it could be a good year. Or perhaps if you extend that a few months into 2025, things will start to turn out very well for China. The Chinese market is incredibly cheap. So big stocks like Alibaba, Tencent, JD.com, those kind of things, Pinduoduo now, because it sold off quite a lot. They're on around 7, 8, 9 times forward price earnings. And the thing is that, they probably won't go back to the kind of multiples that they were on before, or the kind of multiple that India trades at today, because of this political overlay in China called common prosperity. And the big companies are reluctant to show a lot of earnings growth for fear that, that'll show that they're taking away market share from mom and pops or becoming too wealthy. You know what I mean? So the earnings growth is probably going to be only around 10% per year for those kind of companies. But if they're already trading at 7 or 8 times, then in my mind, they're too cheap. And I see one potential big upside for China, which is that if Donald Trump is the next president, I think he wants to make a deal with China, a trade deal with China, which would basically involve the Chinese making electric vehicles in the United States. And the Chinese reacted to the 2016 tariffs with anger and arrogance. This time, I don't think they'll do that. I think they'll make the deal.
Instead of making it in Mexico and then shipping it over, right? I mean, but there's of course also all sorts of talks about tariffs, and maybe it's a starting point in negotiations, right? 60% tariffs, even higher, we've heard, et cetera, et cetera. By the way, has there been any fresh polling, with after Robert Kennedy Jr. threw his support for Trump, or no,
Yes.
None yet?
Yes, there has. The most important thing is the Electoral College. That's how the vote's determined. And the person who does the best work there is a gentleman named Nate Silver. And since RFK Jr. dropped out, he actually has Trump in the lead for the Electoral College. Apologies, I don't remember what it was. It just came out yesterday, but he's in a slight lead now, whereas prior to RFK Jr. dropping out, Kamala had been in the lead.
Okay. All right. By the way, Mark, I just want to make it's just a sort of announcement for our viewers as well. We usually wake up in the morning and get Fed headlines, right? Some FOMC members speaking overnight. We have Christopher Waller here in Mumbai. There's a big summit happening, and he's going to be in conversation with a senior official from the RBI. It's a fireside chat. So I think we could get a headline in the next 2 hours out of Mumbai here, BKC. So he's known to he's known to move markets, right? I mean, more indicative of policy. He speaks less, but I think makes more of an impact when he does. Mark?
Yes, that's right. He certainly doesn't mind expressing his views, and important person. And so it'll be very interesting to see what he says out of Mumbai. I look forward to listening to that.
All right, absolutely. So that's the big sort of name here. There are many big faces, of course, at the FinTech Summit, which is happening here in Mumbai. And we'll, of course, get you a lot of them. Mark, great to speak with you. Thank you very much for joining us. Appreciate it here on CNBC-TV18. We'll run you through some calls on other asset classes as well. We've been talking about equities, but here's Pankaj Chitangla of First Spaces, who's weighing in on the currency, he says the USD INR rate is held in a narrow range with strong resistance at 84 to the dollar mark. Yeah, he says, as he anticipated, the dollar index continues its downward trajectory. Probability of rate cuts in the US is keeping the dollar under pressure. Considering the trend and combining with the strength of the Indian economy, he expects the dollar INR to fall towards 83.75 to 83.5, which means the rupee strengthens in the near term. He says a daily close above 84 would invalidate this outlook.
On bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield remains in a range of 6.85 to 6.89% in the last 1 week. He says 6.85% is currently acting as a key resistance level. He adds that the market is in bull steepening mode, especially after Jerome Powell's comment at Jackson Hole. He says there's also strong receiving interest in overnight index swaps, with the 5-year OIS currently trading in a range of 6.03 to 6.07%. Neeraj expects the 10-year benchmark bond yield to maintain a range of 6.85 to 6.9% for now.
Well, we've got a lot of stocks that we're tracking for you in our special Top 10 segment. Let's run you through the list. We're looking at L&T Tech Services, LT Finance, PNC Infra, NBCC, Ava Space Solutions, Lupin, Zydus, Rolex Rings, and Bharti Airtel. All of them will be reacting to positive news flow, while you have Tata Technologies that will be reacting to negative news flow. Well, I'll tell you what, we'll slip into a short break. You come back, we'll get into all these stocks in further detail. Our Top 10 segment is waiting for you on the other side.
Welcome back. So the cues are, slightly weak, you can say, with Asia looking a little somber. But against that backdrop, this is not bad because the implied open seems to suggest that we'll get a bit of a small pop at start. So what about stocks? What should we watch out for? Well, our team is standing by to bring you the CNBC-TV18 list of top stocks to watch. Guys, hi, good morning to all of you. Rima, let's start with, L&T Tech Services. There was an investor call, I believe, yesterday. So what are the highlights?
Indeed. So L&T Technology Services held its analyst meet yesterday, and here are the key takeaways. One, the company reiterated their medium-term aspiration to hit $2 billion in terms of revenues and margins of 17 to 18%. They've also revamped their go-to-market strategy, and they're zeroing in on 3 verticals: mobility, sustainability, and tech. And they spent a lot of time showcasing their capabilities over here and how they plan to win in all these 3 verticals. In fact, they also said that later on, after they achieve their medium-term aspiration of $2 billion, their goal is that in each of these 3 verticals, mobility, sustainability, and tech, they want to achieve $1 billion each in terms of a revenue run rate. As for the near term, the management said the conversations and the pipeline has improved compared to last year, but deals are still taking time to close. Now, Motilal Oswal came back quite impressed with their go-to-market strategy. They say it opens up new avenues for growth, particularly in their automotive software development vehicles, where companies like KPIT March have, KPIT Tech have stolen a march over companies. So, Motilal Oswal believes that this approach opens up new avenues for growth. So they have a buy rating, but Nuvama thinks LTTS is a bit expensive, which is why they have a hold call on the stock.
Okay, all right, Rima, thanks a lot for that. Well, let's focus on the other L&T name, that's L&T Finance. Abhishek's here to run us through those details. Morning, Abhishek.
Morning, Nigel. So, Citi is holding a conference with investors. So, over there, L&T Finance was present. So, Citi has written a note on the key takeaways from that conference. Citi has a buy rating with a target price of 221 per share on L&T Finance. The key management takeaways are that industry-wide, the MFI stress incidence is expected to dissipate by H2 FY25. Management is confident that there is no over-leveraging risk for its MFI borrowers. Remember that 37% of the MFI borrowers are first time to L&T Finance, 64% have up to 2 association, and 76% have no other non-MFI retail lending overlap with them. So management is cutting down on disbursements to over-leveraged and overdue borrowers. Focus is on reducing the concentration risk in the portfolio. Home loan lead generation impact will be visible in next couple of quarters, and they are confident of a credit cost guidance for FY25 being between 2.25% to 2.5%. Remember that in FY24, their overall credit cost was about 2.67%. So they expect improvement in their credit cost in FY25 versus FY24. Back to you.
All right, Abhishek, thanks very much for that. So that's L&T Finance in focus. Bharti is going to be the next one, which we are talking about. Rima has got more details. Rima, over to you.
Well, we're watching Bharti Airtel today because Indus Stars has now become a subsidiary of Bharti Airtel. Now, earlier, Bharti Airtel had a 49% holding in the company, and now they've managed to cross the 50% mark, 50.005%. Now, this happened because Indus Stars, remember, did a buyback, which just got concluded recently. They bought back 2.1% of the equity. Now, Bharti Airtel did not participate in that buyback. And by not participating, their effective shareholding in the company went up by a little over 1%, helping it cross that 50% mark. So it was a very nice way for Bharti Airtel to up their shareholding in Indus Stars without having to spend any kind of money. So now Indus Stars is a subsidiary of Bharti Airtel. So the numbers from here on will change for Airtel.
All right, that's pretty interesting to note. Thanks very much for that, Rima. Let's get to Vamakshi, who's watching out for a bunch of stocks. I think PNC, Infra, NBCC and Office. Vamakshi, off you go then.
Well, good morning. Let me first start off with PNC Infra. The company has been declared as the lowest bidder for a project worth 380 crores from NHAI, and this is for construction of an additional 3-lane bridge over River Ganga for connection between Buxar and Baroli in UP and Bihar. NBCC is the next counter. It is expected to open higher because a board meeting is scheduled on August 31st to consider issuance of bonus shares. Lastly, let's watch out for Office Space going with the green for this counter as well, and that is because the company has signed the largest managed aggregation, that is MA deal of 3 lakh square feet with the Nyati Group, and with this the company now has a total of 500,000 square feet of grade A flexible workspace with the Nyati Group. The company will be introducing premium flexible workspaces in some of its prime commercial properties. So given this development, going with the green for Office Space.
Okay, very, very interesting. In fact, we spoke with the company just yesterday, Office. They were explaining how this whole managed aggregator model is asset light and it helps them expand very quickly. And they've done a deal in that space today. Thanks very much, Vamakshi, for that. Let's head across to Ekta now. She's watching out for Zydus Life and Lupin. Ekta, good morning.
Morning. Well, I'll start with Lupin, which has received a US FDA approval for a drug which is used for ophthalmic purposes. It is the generic Alphagen. It is used to release elevated intraocular pressure or patients with glaucoma and hypertension. Estimated sales $178.5 million. Zydus, they've received final approval from the US FDA for a drug which is basically used for uncontrolled tremors in Parkinson's. It's a final approval for the 68.5 mg drug and a tentative approval for the 137 mg drug. The approval, according to the company, makes them eligible for 180-day exclusivity for the 68.5 mg version of the drug, and hence I expect both the stocks to see some green today.
All right, Ekta, thanks very much for that. So that's pharma stocks in focus, Zydus Life and Lupin. Some block deals. How can we sort of wrap up the top 10 without these blocks? Sudarshan has got details. Good morning.
Morning, Prashant. So I have 2 stocks with the back of block deals. First one is Tata Technologies. TPG Rise Climate has sold 3% equity at a price of rupees 1,014 per share, and that's why I blocked this. As of June, TPG Rise had held 9%, so of 9%, it has reduced its stake by 3%. And amongst key buyers are Coptel Mauritius and Gisalo Master Fund. And before this, on August 23, also we had seen block deals in Tata Technologies. Alpha TC Holdings had reduced its stake by 2.4% from the holding of 4.3% that it held as of June. Second is Rolex Rings. Company saw block deals of nearly 3% equity, and of this 3%, promoters sold 1.64%, and ICICI Prudential Mutual Fund has cut its holding by 1.2%. And amongst key buyers are SBI MF, Kotak Mahindra Mutual Fund, and Franklin Templeton. So keep an eye on these 2 stocks on the back of block deals.
Okay, all right, got it, Sudarshan. Thank you very much for that heads up. Well, let's quickly recap our list of stocks to watch today. The ones that have positive news flow around them are L&T Tech Services, L&T Finance, Bharti Airtel, PNC Infra, NBCC, Office Space Solutions, Lupin, Zydus Life Sciences, and Rolex Ring. Only one stock with negative news flow around it, and that is Tata Technologies.
Okay, well, we'll take a quick commercial break here. We come back. We have All right, I think before that we'll talk about another important sort of development, this is coming in from the unlisted space so far, of course. So the development is with regards to the much-awaited IPO, the National Stock Exchange, the NSE. Sources tell CNBC-TV18 that the exchange, that is the NSE, has sought a NOC, which is a no objection certificate from SEBI for listing, for filing the IPO documents. The NSE board met yesterday. There was an AGM as well, and they approved the decision to file for an application seeking a NOC certificate. The NOC is given to take SEBI's go-ahead from the department that is concerned with the market infrastructure institutions, or MIIs. It is also needed to get SEBI's clearance for NSE to file an IPO DRHP. I mean, you know, there's a fair bit of anticipation, excitement around this, but I just want to make one thing clear. They're seeking a NOC. I mean, this is not, you know, it's still very, very early days, and they're just sort of going to the regulator and saying, well, you know, do you have objections? As we all know, over the last couple of years now, I mean, the regulator, of course, has objections, and they have there have been lots of stories done. There's a case which is in the Supreme Court as well. So, I mean, there's a fair bit happening which is going to determine the prospects for the NSE IPO. This can be read as a positive, but does it really move forward the process of the IPO itself? I mean, I think we should hold our horses, not get too excited about this one. I mean, it's a it's an important name, just of course the sheer size of it, but also of course the number of people who own these unlisted shares now. I mean, it's not a company, as someone said, it's an asset class in itself with the amount of activity around this one. Of course, in the unlisted space, the share has become more and more liquid, but nothing close to what it will be once it actually makes it to the market. All right, let's talk about commodities and the roundup from there. Manisha is here with details. Manisha, morning.
Morning, and thank you for that, Prashant. Well, after gaining 7% in last 3 trading sessions, we finally have seen crude oil prices come off those kind of highs. So overnight has been more than 2% of a decline, while the concerns still are there. But with the kind of surge that we had seen, there is some profit taking, exactly what we are looking at. Also, when you look at various reports from Goldman Sachs or Morgan Stanley, they all seem to be revising their expectation of price outlook on the lower side. Goldman Sachs has been the later one, saying that $70 to $85 between this is where they see Brent trading now for the rest of this year. It's a big range, but clearly a very limited one on that. On the other side, you still have the gold and silver prices trading near all-time highs. We have seen the metal prices, though, come under a bit of a profit-taking. The gains, in the meanwhile, have continued in many of these soft commodities. Rubber, for example, is trading at a 2-month highs right now. Coffee prices trading at a 13-year highs. You have the sugar prices now trading at a 6-week highs. So many of these soft agricultural commodities in the global market seem to be doing quite well.
Okay, all right, Manisha, thanks for that. Well, for the time being, though, we'll slip into a short break. Up next, we'll have Siddharth Khemka, Head Retail Research at Motilal Oswal Financial Services. He's waiting by to help us out with some fundamental talk. Welcome back. Well, let's get straight to some fundamental analysis. Sid Khemka, Head Retail Research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning. Well, let's talk about LTTS. They had an analyst meet yesterday. The stock is not very, very cheap, but they have given this ambitious guidance in a couple of $1 billion, split it up vertical-wise as well. What do you make of the stock?
Yeah, good morning, Nigel. Glad to be on the show. So if you look at the re-engineered go-to-market strategy, we believe that is really positive, given that some of their product segments were a bit confusing for the market. So they have given out an aspiration of achieving a revenue run rate of $2 billion, EBITDA margins in the range of 17 to 18%. And what we believe is that the growth drivers for the company remains intact for some of its key verticals across the ERD client universe. And with the new go-to-market strategy, the company is redefining its segments into high growth areas such as mobility, which is your software-defined vehicles and electrification, sustainability, which is your industrial products, plant engineering, and finally the tech business, which is your medical devices, communication, high tech, smart cities. So we believe that if executed correctly, this could boost the long-term growth for the company. And this new strategy also opens up new avenues for growth, especially in some of the weak areas such as mobility, which has been a fast-growing area for some of its peers in the ERD space. Hence, we believe that though the near term or the immediate future could be a little impacted by the demand uncertainty, but this strategy of redefining its business and go-to-market strategy will definitely be a long-term positive. Yes, valuations a bit expensive, but with this kind of growth, we are expecting a 10% USD revenue growth over the next 2 years and EBITDA margins somewhere between that range, so about 17.3% EBITDA margins. Hence, we believe the premium valuation would continue. We are valuing the stock at 40 times and giving it a target of 6,300.
Okay, all right. That's L&T Tech Services. Siddharth, good morning. Good to have you on. I just want to get your sense on this company Office, in case it's under your coverage. Let me first ask you, is it?
No, we really don't cover that stock right now.
Okay. Fair enough. Recent IPO and it's done really well. But let me expand that question to, in general, I mean, realty. What's the sense now? Are you looking for any bargains over here? Because we've been going through some of the industry reports when Knight Frank came out with the report, and I saw another one by Colliers basically saying the same thing, that the price appreciation pan-India is very significant. NCR is even better, and unsold inventory continues to fall. So it seems the fundamentals are still in place. The question is getting the right stock at the right price. So any thoughts here?
Yeah, so if you look at the overall real estate space, the pre-sales booking remains quite strong, and we believe that the double-digit growth aspiration for the overall real estate space that remains intact. However, what we have seen is after a spate of large luxury segment launches, now there is a controlled launch that is happening, and that will lead to some kind of a slower growth compared to the last few years. Also, the premium and the luxury segment, which continues to do well. Now we expect with the upcoming rate cut cycle, the mid segment also coming in and doing well with the interest rate sensitive bracket. That should also start doing well. So in our view, what we believe is that the overall there could be a phase-wise launches of some of the key projects which could keep the growth visibility strong. And what we like is now some of these mid-segment residential space companies, for example, your Prestige Estate, Shobha Developers, and Godrej Properties. So these are some of our preferred picks from the real estate space.
To stay with us, I want you to listen to this conversation of Medi Assist. That's the first management on the show. Remember, the company announced the acquisition of Paramount TPA for an enterprise value of around 312 crores. Brokerage Investec, well, they are bullish on the prospects on those valuations that this deal has been done. To help us out with an understanding of the deal and the way ahead, we're joined by Mr. Satish Gidugu, the Chief Executive Officer and the whole-time director at Medi Assist Health. Hi, Satish. Good morning. And first of all, congratulations. The street clearly likes what you all have done. So let's understand the deal in further detail. First up, you are talking about some synergy benefits. Could you quantify what are the synergy benefits? And second point on the margins. The acquired asset, Paramount, what kind of margins does it function at? And when does it come up to speed with Medi Assist?
Morning, Nigel. That's a lot of questions. I'll do my best to get to you. First, the acquisition is of Paramount TPA. They're the second largest in the group business today after Medi Assist, and takes us from a group market share from 30% to a nearly 36.6% combined at the overall industry group premiums level, and also allows us to move from 20% to a 24% of the group and the retail premium market share. So, and that's the TPA that we are acquiring, vintage, very well established TPA. Historically, Nigel, if you've seen, many of the TPAs that we've acquired are in single-digit margins. So Paramount is about a 9.5% margin business. Of course, it's an Indian GAAP accounting basis. Takes us typically about 4 quarters to completely flip the operations to our model, mostly because our contracts are annual in nature. The policies renew over 365 days. So over 4 quarters is where you see most of the synergies kicking in. And we also expect Paramount also to take about 4 quarters from closing, of course, to start kicking in from a margin profile perspective.
And you want to quantify the synergy benefits that you were briefly alluding to?
So we were historically 23-24% margin business before we acquired the businesses in calendar year 23. We are currently reporting our 21% console. The endeavor is to get back to our stable margins. We probably stay at the current margin profiles for next year, given about 150 bips of impact is what we are estimating on the margins for FY26.
Sorry, Satish, hi, good morning. You're saying for the consolidated, so you'll take about 4 quarters to get margins at Paramount up to Medi Assist levels. That's what you're telling us?
Yes.
So 4 quarters out, in about a year's time, margins will be, you want to sort of give us a number? What should we work with? You said 20...
I think we are currently at 21% and we expect to hold. But of course, whatever synergies would have come next year, up to about 150 bits impact would come because of this acquisition. So FY27 should be a fully normalized number.
Okay. Got that. Now, what do you plan to do with the retail business at Paramount? The group business is doing well. On the retail side, will you wind it down? Would you try to sort of grow it? What are the plans?
So Prashant, retail is a very important part of our growth because of our disproportionate growth in group. Sometimes, it may not be obvious that we do a significant amount of work in retail. For 14 insurers out of the 28 that we work with, we have a 5% market share, in retail, and Paramount will add another 20% to it. So retail continues to be a focus area, Prashant, and we'll continue to grow all 3 segments: group, retail, and the government.
Satish, on that point, can you just tell us, for you right now at Medi Assist, what's the margin differential between the group business and the retail business? And once you assimilate Paramount into the operations, what will be the mix?
So today, we're roughly about 70% in group revenues, about 10 to 11% coming in from retail, about 10% from government, and the rest coming from the international TPA that we had acquired some time back. Paramount's group, retail, and government are very similar from mix perspective, so it's fairly instantly accretive. And so we don't today differentiate group and retail margins because the efficiency comes because we're able to treat the whole servicing and back office as one. So we don't really differentiate the margins between group and retail.
Okay, fair enough. So let me ask you a broader question. I mean, steady state, post-acquisition and post all the synergy benefits kicking in, for the combined entity, say a year down the line, by the end of the year or next year, what is a steady state margin profile that you'll target?
We would like to go back to our previous steady state margins, so which is 23 to 24%. So that's the effort that's on. Barring a minor timing differences, that's what we believe is our stable margins, and that's what we should get to at the earliest.
All right, Satish, this acquisition strengthens your presence in the group part of the business. Are you all still on the prowl? Are you looking at a retail individual asset as well, a TPA with that sort of presence? So maybe it balances the two then.
I think retail needs a very different approach, Nigel. The retail business, the way it works for insurers is very different. So I think we have the right kind of now technology network. We made significant investments in fraud-based abuse prevention, a fair bit of investments over the last 1 year. We think that what we're doing is on the right track from a retail perspective. So necessarily acquisition is not the route to grow the retail business.
Satish, your fortunes and are tied at the hip to what insurers do, right? I mean, how well insurers do. There's a great deal of sort of excitement coming back for a variety of reasons for insurers themselves, growth rates and this period of sort of changes in rules. And there was a bit of upheaval. All of that is settling down. What are your own expectations? Which segments do you think are you most positive about from here on?
So I think 2 or 3 tailwinds there, Prashant. One is the government wants insurance for all by 2047 with a significant focus on health insurance. The second thing that's working in our favor is the significant focus from the regulator on the policyholder experience, improving the service levels and the technology deployments. And hence, we think that we will continue to match or better the health insurance growth rates, which we still predict will be at least a 20-21% year-on-year growth rates. Group has been marginally faster in terms of growth rate simply because of the employment growth and the benefits expansion that happens in group. But on the whole, if you see the industry has been 20-21% growth rates, I think we'll match the industry growth rates or improve on it.
Just one last quick one, Satish. We've been hearing reports of issues with regards to Star Health. Sort of there was this thing with Max which was going on. There were this issues with the Gujarat hospitals earlier. Of course, that got sorted out. I mean, can you tell us if your relationship with Star is all well and no issues?
It won't be appropriate for me to comment on any specific insurer, but we work with all 28 insurers that are offering the group product today, Prashant. We work with all of them. And of course, one of the reasons for us, if you recollect some of our past conversations, network is a very clear focus area. So we continue to build and strengthen our relationships in network. Most of the insurers that we work with today use our network.
Yeah. Okay. All right. We'll leave it there, Satish. Thank you very much for joining us. Good speaking with you, and good luck with that acquisition. And we hope to speak after earnings for the second quarter come through. I think we'll take a quick commercial break here. There's, of course, 10 minutes to go for the pre-open session to kick off. Sid is with us from Motilal Oswal. We'll get you some technical trades as well with both Mitesh and Sudarshan. Stay with us.
Welcome back. Well, we're still in conversation with Siddharth Khemka, and the cues are telling us that maybe, best case, we'll have a bit of a mild positive start. Let's pull up the implied open once again. So it's steady, still showing that we could maybe get 10-15 points at the pop. Siddharth, your sense on insurance overall, I don't know if you could hear our conversation with Medi Assist on the health side. They're sounding very optimistic, talking 21%, steady state growth, 23-24% margin. So between health insurance, overall life insurance, which has had a fantastic run, or maybe a way to play it could be a TPA like Medi Assist. I mean, how do you play the space and what do you like here?
Yeah, Surabhi. So I think the entire insurance space is finally coming out of the woods post the pandemic, where we saw a lot of pressure on the numbers. Now both life insurance players have reported healthy premium growth, while in the general insurance space also, firms have posted a decent growth underpinned by the strong auto sales, high demand for health insurance. So what we believe is that both would continue to do well in the general space, health insurance and its penetration in the retail, which is still low. That would drive growth. So what we like within the health insurance or the general insurance is the ICICI Lombard and Star Health. So Star Health is our preferred pick there. We believe that the company would report strong growth on back of the penetration in the retail health industry, so some of its specialized products, as well as deepening presence in the product space. What we are expecting is an 18% NEP growth for Star Health and almost 30% PAT growth over the next 2 years, leading to a target price of 730 for Star Health. ICICI Lombard has been doing well. We have a target price of 2,200, which is almost closer to the target price. The stock has done well. Life insurance, SBI Life is our preferred pick given its efficiency ratios as well as the strong VNB margins and growth. There we have a buy rating with a target price of 1,900. But in general, we like the entire insurance industry from here.
Okay, all right. Thanks a lot for that, Sid. By the way, the bottom of your screen, there was a flash with regard to GMM Pfaudler. And the total equity that's changed hands is around 8%. I'm looking at the non-promoter entities, and just one of them, that's Geranium Investments, that has 8.25% stake in the company. And their entry into the company was around a year or so ago when Pfaudler sold close to around 13% or thereabouts. So as of now, just trying to get some data points. But in the non-promoter entity, that's Geranium Investments, that has 8.25. Nimesh will try to join us and give us further details on that front.
You know, Geranium in August 2023, I'm just looking at reports to jog our memory. Geranium was the entity that had bought when Fodler was selling out. It was the same chunk, I mean, just over 8% equity that was bought by Geranium in August of 2023, so just about a year ago. And it seems that now they're perhaps cashing in on it.
We'll have to confirm that, Surbhi, whether or not it was them.
It is Geranium or
but,
not.
you know, just going by what you're saying as well, if they held it for a year, then they didn't make any money.
That's what I was wondering.
You pull up a one-year chart, the stock is down 10%. So we'll try to get you further clarity on this front. But this is the large trade that just took place. And in fact, we'll try to get you details in just a bit.
I think this was, I'd rather sort of get the management on, but I think this was awaited. I mean, a large block was awaited here in GMM for the last couple of months. But, you know, is this that? We'll sort of have to sort of refresh and speak with the management to get some more insights. And as you said, Nimesh will also be with us. Let's get in Mitesh and Sudarshan with us to run us through what they're making of the screen and whether we get to new highs and beyond, and whether Bank Nifty will start to show some momentum. It moved up, but no real momentum. Gentlemen, good morning. Good to have both of you here. Mitesh, let's start with you. How are things looking, and how would you trade the indices first?
So, morning, Prashant. I think on the indices, you know, now the key event would be getting beyond the earlier high, which is 25,078 or 80 levels. And once that happens, I think expect 25,400, 500 as the target area. The Nifty, IT, Nifty Bank both look decently good enough, and I think should support the upside movement. So, either buy on a breakout or wait for some kind of pullback to play out. Day before yesterday, we had a gap up opening. So, that could be very interesting, and any declines closer to 24,900 also would be buying opportunities. So the stance is on the long side. It's just tactically when you want to initiate the position.
Okay, got that, Mitesh. Thanks for that. Just coming back to you, Sudarshan is also with us. Sudarshan, morning. So what's the approach you will take today?
Yeah, good morning. See, yesterday's approach was do nothing, and today I think I'll follow. You know, this market is now wanting a serious bout of consolidation. When, you know, these TV news channels were not there and only the newspapers were our source of information, there would sometimes be a headline in the paper, tired bull liquidation. So that's exactly what's happening. Nothing is bearish, nothing has changed, but the buyers are getting tired and they want probably some rest. So that leads to a choppy market. If you find a significant dip, and I can't define it, then maybe buying is possible. But since it is undefined, it's much better to stay away from the Bank Nifty and the Nifty both for today also.
All right. You know, what we'll do is, Sudarshan and Mitesh, take a quick break here. We'll come back for your specific stock trades. Stay with us.
Welcome back. Well, we are still in conversation with our technical experts. So let's quickly look at some more trading strategies that you could perhaps consider today. Mitesh, morning. So let's go back. Stocks, what would you look at? I don't know if any of the financials yesterday, they were flying high, if they make the cut for you, or any other names?
They do, in fact, Surbhi. Good morning. The Fin Nifty did better than the Bank Nifty, and I have Bajaj Finance. We had Bajaj Finserv yesterday. Today is Bajaj Finance, which is showing signs of upward breakout. So 69.30.50 should be the target area here, and keep a stop below 68.24. HDFC Life is a buy with a stop at 724 for targets of 770. Indigo is a buy with a stop below 46.90 for targets of 4900. And one sell call, that's Adani Ports. If it breaks 1470, take a tight stop loss at 1490 half on the short position and look for targets of 1425.
Got it, Mitesh. Sudarshan, what about you? What stock picks do you have for us today?
Well, it's mainly on the buy side, or rather all on the buy side. Jindal Steel is a buy with a stop under 960. The two power finance companies had a big run up yesterday. It is possible we can see follow through. Both should be bought on a dip, but then they are buying ideas. Power finance with a stop under 510 and REC with a stop under 585. But don't run and buy them at the open. Buy them on intraday dips. And finally, Tata Communications is a positional trade as well as an intraday trade with a stop under for buying with a stop under 1925.
Just want to look at what Z did finally yesterday. Let's just have the stock up. It was, I think, up 15% at one point.
It's up 2% now in pre-open.
Pre-open. Yeah. Did it end sharply higher?
Yeah, 11-12% higher, because I guess the takeaway really was that while this is nothing new, but it does remove a major overhang. The $90 million claim that Sony had put, that is settled and no further litigation. And basically, you learn to move on in life, basically. I think that was the interpretation the market took.
When it came, I was thinking, that all those claims, the 90 million, 100 million, that was just, those were just sort of,
posturing in the courts.
Yeah, posturing and threat tactics.
In fact, Karan Turani said that we are not factoring in that they have to pay anything in the first place.
I was kind of surprised when but yeah, it's a bit of a relief. It's been bombed out, etc. But let's get a technical view here. Mitesh, any thoughts on this one? Z?
Yeah, I think, the stock has been very big underperformer. But if you look at the last about 3 weeks of data, on 4 occasions, the stock has made a low, closing low around 133, 134 and held it. And, yesterday was some kind of a reversal. So I think despite being an underperformer in the short term, the stock could, make up for that underperformance. There's signs of a bounce back. The first target should be around 161 and then possibly the highs of 167, which the stock made in June, should be revisited. I'm not sure of stock going beyond that, but these are trading targets.
All right, fair enough. We'll leave it there. Mitesh and Sudarshan, appreciate you joining in, and more later. Rajesh Palvia is VP Technical and Derivative Research at Axis Securities with some thoughts on the trading setup. Rajesh, good morning. Good to have you here. So what would your trades be, Rajesh? How would you approach things?
So looking at the setup, we are holding bullish view, and we believe that, we are almost now ready for, new all-time high trajectory for Nifty. The way put writers have added their position at 24,900, 25,000 strike, that clearly shows that, we may see a 25,100 to 25,200 kind of level in the continuation of this up move or towards the expiry for this month. Bank Nifty is also now trading above 51,000 levels. So both indices are looking bullish at this juncture. And I think one should remain on the buying side of the trade. For Nifty, we are initiating here to buy 25,000 call option, which was closed at around 80-82 rupees. And we are projecting a target of 140 to 160 for this call option with stop loss of 50 rupees. And even for Bank Nifty, till Bank Nifty is holding above 50,750, I think one should try to buy any kind of minor dip in the volatile market. And we are projecting target towards 51,600 to 51,700 for Bank Nifty. So both indices are looking promising. Broader market is also looking good. Mid cap, small cap space is also doing good. So we believe that, this bullish momentum may continue further. On the stocks front, pharma space is looking very attractive. Lupin is our buy at this juncture. The way stock is making series of higher top, higher bottom formation towards the end of this expiry, stock is now trading near to the highest point of this expiry. So we believe that, Lupin may exhibit good amount of rally further. 2250, 2260 would be the next target. One can buy Lupin with stop loss of 2135. Another stock is from insurance space, that is ICICI Prudential. Again, stock is now penetrating to its previous multiple swing high. And the way stock has shown buying interest in last couple of days, we believe that, ICICI Pru can extend its gain, and possible target towards 770 to 780 we can see in the next couple of days. So ICICI Pru can be a buy with stop loss of 715. And the third stock is from metal space, that is Vedanta. Vedanta is almost trading near to its this month expiry high. And the way stock has shown buying interest in last couple of days, we believe that, we may see furthermore rally towards 485 to 490 for Vedanta. So one can buy Vedanta also with stop loss of 448.
Okay. Got that. By the way, in the pre-open, like we flagged off in the morning itself, NBCC is very excited because the company is going to be considering a bonus issue on the 31st. So just pointing that out. Pre-open Nifty is up about 25, 26 points, which is not too bad considering the cues. And this is a stock, keep your eye on this one. PSU company saying they're considering a bonus, and the market seems to like the sound of that. Sudarshan, back to you. Any thoughts on Z and any other stock that you want to flag off for us?
So two stocks that I have today. First one is AMI Organics. HDFC Securities has upgraded the stock to buy and target is rupees 1600 per share. And the reasons of upgrade are first, ramp up in Fermion contracts. Second, expansion of specialty chemicals portfolio. And third, balance sheet turning net cash in Q1 of FY25. Increase in better margin CDMO contribution and ramp up in capacity utilization of specialty chemicals plant. HDFC Securities expects margin to improve by more than 500 bps by FY26 and expects profit to grow at a 38% CAGR over FY24-26, led by 29% CAGR in EBITDA. And then second stock is Z Entertainment. The stock has been in focus. Yesterday, we saw stock gaining up to 15% after company announced that it has settled all the disputes with Sony India. And after that, brokerages have written on the stock. Citi maintains sell call target is rupees 137 per share. It says all eyes will now be on business fundamentals. Settlement would help allay investor concerns around potential liabilities. Now it will monitor any material improvement in ad revenue market. And UBS maintains neutral and target is 180 per share. It says Sony settlement is seen as a positive as it removes a key overhang that company has for the last 2 to 3 years.
Okay, got it. Sudarshan, thanks very much. We will keep an eye out on all of those stocks. By the way, while we keep an eye out on all the listed stocks, there's a lot of buzz in the unlisted equity space as well. And one big company that everyone is focused on, of course, is NSE. Now, the development last evening was that the NSE board of the National Stock Exchange, has decided to go forward and request SEBI for an NOC so that they can move ahead with the NSE IPO. Now, that's what we have been picking up. Let's quickly go across to Deven Choksi and get some sense on what this could potentially mean and where we are in the whole journey of having a listed national stock exchange. Deven, good morning. Thanks so much for joining in. While we, of course, we need to ask you about what you think about the timelines, I think the valuation part is really important as well, because Nigel just tells me that in the unlisted market, the shares were quoting at 5,500 as of yesterday. So there's been a massive move already. What do you think of, NSE valuations in the unlisted space now, and what will potentially be on the table if we do move towards an IPO?
Hi, Surbi. Good morning. Well, I think going by the data which they have given in the last earning presentation, the company is basically growing at the revenue book in the vicinity of around 40% plus. And I think the profits likewise, I think, are growing at the same pace. So this year, FY25 could be possibly the year in which I think they should be somewhere around 19 to 20,000 crore to a top line. And somewhere around 11,000 crore or so should be the operating profit for the company. So from a perspective of looking at this company and the growth at around 40% plus level, I believe that the fundamentals of the company are very much in shape. Of course, I think they did not say much about, I think, the market share that this particular exchange is assuming, both in cash market as well as in the derivative markets. So I think that's where the strength is. Given the possibility that this time around the earning per share could be in excess of 200, I think you are likely to see at a 40 price earning multiple, which is a very conservative price multiple that I think we can possibly ask for, a price of around 8,000. And probably if this particular premium has to come to them with around 550 times price earning ratio on a 200 rupee earning per share in this year, it could be somewhere around 10,000 rupee price, I think, for the stock. So certainly, I think the company remains absolutely convincing from the investment perspective, with a lot of other positives, including, I think, the possibilities of cross-border trades getting started some point of time within the same exchanges, I think, where probably you are likely to see the larger participation of the volumes.
Deven, hi, morning. Actually, for viewers who are watching and they're wondering, well, this stock or that stock, I mean, it's not yet listed, but NSE is a real option. Many large investors have done that, right? I mean, there is valuation comfort, there is listing timeline uncertainty, but the business continues to do well. I mean, there is going to be better price discovery once it makes it to the market. But as you said, I think, and that IIFL earnings, I mean, there's only, I think, IIFL and a few others who cover it. Their earnings estimates on FY27 basis, NSE is at about 15 times earnings. This is IIFL. And it's a dominant exchange, etc., etc., etc. So, do you think viewers who are watching should consider buying some NSE? Maybe even selling some of the outrageous winners they have in their portfolio and moving to some NSE. What's your sense?
Yes, Prashant, good morning. Well, bound to happen that way. The moment I think the company gets listed, I think you're likely to see larger amount of participation from the public in general. Currently, even in the unlisted market, the stock is trading. I think there is a certain amount of limitation in this particular stock. I think a minimum investment size is one of them. And that's where probably I think not many people could participate into this particular counter. But moment the stock is available through IPO, certainly I think there has to be a strong re-rating happening to the valuation. What I put across as a 40 times or 50 times price earning ratio could be, I think, very conservative for a company which is growing at a 40% plus rate of growth. And the visibility of growth in the coming years remains on the certain side, on a higher side. A comparative exchanges, I think, in the market, be it in cash market, be it in commodity market, I think you're finding the valuation ratios, I think, quite high compared to even the valuation ratio that I'm talking about. So from that perspective too, I guess I think the investors should find it fancy. And most importantly, most of the funds who are basically having the weight on the market intermediaries, they would probably, I think, like to create additional amount of investment exposure into their funds once the company is listed. Rindal, I think today, majority of the mutual fund and others who would like to basically be part of the investment in NSE, they are not. I think they will soon probably like to, because I think the stock is listed.
All right, Deven, as you said, the minimum quantity, I believe the minimum quantity today is around 200. I've not yet verified that totally, but that would amount to more than 10 lakhs of a ticket, for someone who wants to buy 200 shares. But Deven, final question before we let you go. There's a regulatory overhang as well. Now it's deemed a public company. So there'll have to be some amendments to get it listed. Your comment on this?
Well, I wouldn't know much about, I think, what kind of amendments I think they will have to know. Maybe I think the NSE management would be the better place, authorities, I think, to talk about those amendments that they wish to talk about when they apply for IPO at NSE.
But Deven, just going back to the valuation number, you said possible to see a 40 times forward multiple, which would take the price to around 8,000, right? That's 1 year forward earnings if we ascribe it a 40 times multiple.
This is FY25. I think I'm talking about FY25, 200 rupee earning per share. And I'm assigning, I think, 40 times price earning ratio for FY25. I'm not even going beyond that. Exchange is growing at around 40% rate of growth. I think one can extrapolate those numbers subsequently.
I mean, so we've hit list today, nothing less than 10,000. You can take it in writing. Deven, thank you very much. But that's the uncertainty, right? When will it list? Appreciate you joining in, and thank you very much for being here with us on CNBC-TV18. There is, I think, just a few seconds to go for market open, and we'll have the first rates which will start to tick in. And the Nifty about 13 points higher, the sensex about 68 points in the green. Can we sort of make another run for the all-time high, and cross it, sort of close above it, and then I think the next level is 25,530, as we've been saying. That's a simple retracement level. So what do we have? The first rates on your screen: 15 points, 12 points, 25,023 now in the red. So it's like pretty similar to the kind of open we had yesterday, the kind of market we had yesterday. Although through the course of the day, you had, I think, 3-4 these 40-point bumps which got sold into. So we'll see if we have some similar kind of session. Nothing, 3 or 3.5 odd point change. We've got the sensex, which is up about 25 points, 81,733. The bank Nifty is down about 100 points, 51,174. The IT index is up about 155 points, which is about 1/3%. So that's essentially what you have right at the word go. And, 4:1 in terms of advances to decline ratio at this point. But all about stocks, so let's take it to what's happening.
I checked out BSE at the start just to see if the excitement is even rubbing off, and it is. BSE started about 3% on the higher side, and actually some of the headline makers, NBCC, we flagged off this stock because of the bonus that the company is looking at, 6% higher, and Office is the other one. Keep your eye out on this one, on the big deal that they've signed for their expansion, 6% here. But anyway, back to the large cap screen. That's about 14 up on the Nifty right now. LTI, Mindtree, Wipro, Infosys. So it's technology to begin with. That's where the big buying seems to be. M&M seems to be putting on about 0.7% as well. There's Cipla in the mix. Bajaj Finance is trying to build on yesterday's gains and momentum, but actually then it's fizzling out. Reliance is just at the borderline with a gain of about 9 to 10 rupees at this point in time, and then it completely fizzles out. On the downside, Shriram Finance, after yesterday's big rallies, losing about 0.5%. Divi's, Axis Bank, these are some of the other stocks on the way down. Ultratech Cement, ONGC, and the two-wheeler guys, Hero Moto and Eicher, are starting lower. Bajaj is absolutely flat. So safe to say that it's almost impossible to highlight any trend, barring the fact that there's some buying in large cap IT that's evident. Everything else is either flat or listless. LTI Mindtree is really piling on the gain now, 2.5% on the upside. Wipro, Infosys I mentioned. Let's just see if TCS is. No, TCS is actually not part of the upside, at least as of now. HCL Tech is, but overall, IT leading from the front, 22 points up on the Nifty.
Well, that's right, Shirbi. I know the one that's moving like a bazooka is Datamatics. Yesterday, the stock was up 20%. They had announced they're partnering with Microsoft to develop its own AI-focused Copilot solutions. So that one is again up closer on 9%. Big up move is what we're seeing on that counter. You have Tata Elxsi. That's pulling back a little bit. I'm looking at a Kotak note. They said that the company is excellent, but valuations are inflated. Valuations are around 61 times its forward earnings. They believe that it's stretched, and that's why they have retained their sell rating out there. So Tata Elxsi is pulling back a little bit. GMM Pfaudler, large trade, 8% equity changing hands in pre-open. The street likes that the deal is out of the way. We'll have to find out who exactly is part of that deal. But for the time being, just take a look at that. A big up move is what we're seeing out there. A rank underperformer, down 10% in the last 1 year or so. But for the time being, it's pulling back some of those losses. A couple of other big movers. Trent has moved up by close to around 2%. It's bracing to get into the Nifty. The official announcement has already come in there. So bulk of those flows have taken place. But now, in the next couple of weeks, we'll have trend that moves in as well. On the flip side, RBL Bank down close to 1.5%. Aarti Industries is down close to 100%. I think we're an hour or couple of hours or so away from those fresh all-time highs. Today is the day.
And NIIT, did you mention? NIIT is finally cooling off. It's had a massive run, almost 45-50% in just a couple of days. A little bit of a cool off today, 4% lower.
All right, we've got about 20 points on the Nifty. 25,040 is where we are at. And we'll have the rates coming up. We should look back at the indices as well. Market breadth is positive, about 2.5:1 in favor of advances right now. I think, apart from what we've already mentioned, IFCI is up about 4%, so about 74. It's got very large volumes. BLS is up about 3.5%, 450 on BLS. We got Infi Beam, which is coming up with a 2.5%, I think can be safely ignored. EMS Limited, 4%, 4.5% higher, 885 on EMS Limited. It's got volumes. Insecticides India is up 9%. Stocks are about 1,010 on Insecticides India. Kiri Industries has been having a fantastic run recently. From the lows of about 300, it's basically added 100 rupees in the last 2 weeks or so. That is Kiri. What else? Aptus value is up about 3%. But again, volumes are nothing to talk about. So we'll just sort of wait for volumes to pick up if they do. And then we'll look at some more names here. Tata Elxsi is the big loser. It's down about 3%. Stocks at about 8,700. But you have Hindustan Zinc, which is down about 3.5%. RBL Bank is down about 2.25%. Ola Electric will come up on your screen. That is down about 1% as well. There is K Fintech, which is down about 3%. K Fintech, 1,115. K Fintech, I think, was sort of a mover yesterday on the upside. It's giving up some of those gains. And NIIT, as Surabhi mentioned, is down 4%. But, it's basically gone from $100 to about 107. Yesterday's high, I think, was closer to 180. So that's a sharp 75-80% move very quickly. And today it's giving back about 4% of it. There is Nykaa, Policy Bazaar, Titagarh, Kalyan Jewelers. These are all large liquid names, and they're all down between 1.5 to 2% at this point in time. It's a quiet kind of a start. You got about 20 points for the Nifty at about 25,040 or so. So that is some price action which is coming through. I think let's just look at the L&T tech stock as well. And let's go back and sort of revisit it in terms of what's going on there. Stocks up about 2.25%. Rima, tell us more.
So the key takeaway in their analyst meet yesterday is that in the medium term, the company wants to achieve a revenue, annualized revenue run rate of $2 billion and expand margins to 17 to 18%. After that, after they achieve this ambition, the company has said that in the three verticals which they're focusing on, mobility, tech and sustainability, the company wants to achieve $1 billion each in terms of revenues with a focus on expansion in margins. So the company has laid out this strategy to achieve this growth target, and L&T Tech has been a bit of an underperformer. Particularly what the street like is that, say you always compare L&T Tech to a KPIT Tech. Now KPIT Tech has been outperforming because it's present in the automotive software development vehicles where there is a lot of offshoring work taking place, and KPIT Tech has been a beneficiary. Now, analysts' contention was that LTTS is a diversified play, but it's not present in this high-growth automotive, software development space. So yesterday, the management did spend time on it. They're calling it out as a focus area, and they've, revamped their go-to-market strategy to try and target some of these high-growth areas. So Motilal Oswal came back quite bullish. They have said that this revamped go-to-market strategy opens up new avenues for growth in the hitherto weak areas such as mobility, which is growing fast across peers. Their target price stands at 6,300, a close to 12-13% upside from where the stock currently is. Nuvama says that growth is fine, but the stock is a bit expensive valuations-wise, so therefore the risk-reward is unfavorable. They have a hold rating on the stock, but the key takeaway from the analyst meet is that the company is focusing on getting growth back and focus is also on margin expansion. Back to you.
Okay, all right. Rima, thank you very much for that. Well, Pankaj Tibrewal is with us, founder and CIO at Ikigai Asset Managers. Pankaj, good morning. Great to have you with us here. Thanks very much. And it's a sort of incredible sort of market back at new highs. Lots to talk about. Pankaj, and that note that you sent out, right? I mean, learnings from 2 decades of investing. It's a fantastic write-up, and I think everybody should read it. You should make it sort of public on your website because it's quite rich in what new investors can take away from it. And one particular bit struck me: self-control in investing, the opposite of FOMO. Our market's a bit out of control right now. How would you read things, Pankaj? Especially in mid caps, smaller caps, especially SMEs, etc. What's going on?
Good morning, Prashant, and thank you for the kind words. On the markets, I think it's an incredible last 3 weeks, from panic to euphoria. We saw Nikkei being sold off almost 20%, and now they are up 23% from their recent lows. S&P is almost 1% away from all-time high, and so are Indian markets now. So it's been complete panic to euphoria in last 3 weeks. But when I look at some of the data points, firstly on the earnings side, I think this quarter was not a great one as far as earnings are concerned. And I look at the data very closely. The NSE 500 companies reported 7% earnings growth on a headline basis. But when you bifurcate it into 2 parts, which is BFSI and the non-BFSI segment, there are about 89 companies on the BFSI segment which delivered 19% earnings growth. But the non-BFSI segment, which is the rest 411 companies, delivered just 1% earnings growth. So clearly there has been deceleration in terms of earnings growth. And our belief is that the first half would be weak as far as corporate India is concerned on the earnings growth because margin base is quite high. The second important part to note is that most of the companies mentioned elections and heat wave as the constraint in the first quarter, to the extent that elections were mentioned 1,700 times in the NSE 500 con calls, and heat wave was mentioned as more than 100 times in the con call. So clearly we have to see that how the second and the third quarter spans out. Third important point to note is that the government capex is down by 35% in the first quarter. That means for the remainder of the 9 months, government needs to spend 1 lakh crores a month to cover their budgeted numbers, which looks to be a tall task, not an impossible task, but a tall task. And hence you have seen some sell-off in the exuberant names or pockets of excessive valuation, like defense, like railways, like infrastructure. Some of the capital goods have given away 20 to 25% returns. So my sense is that over a period of time, we need to avoid the pockets of exuberance. There are certain segments which probably are looking reasonably okay, but we need to navigate next 6 to 12 months carefully. I think this is a period where you should minimize risk rather than maximize return. I think that should be the trend. Also, one interesting point which we are noticing is that the breadth of the market has started to narrow down. Over the last 20 days, we have seen large caps doing slightly better than the mid and small caps, and sector rotation is happening at a faster pace. So I think a diversified portfolio will be the order of the day, and risk should be managed in a fairly decent manner. Second, on flows, I think some interesting data points there to notice out. Though domestic flows have been extremely strong over the last 4 years, we have seen about $100 billion of domestic flows. But something to note interesting out there, in the first 7-8 months in calendar year 24, 80,000 crores have come into sectoral and thematic funds out of the 2 lakh crores on mutual funds. This is a slightly worrisome sign because people are chasing returns. And don't forget, Prashant, that 50% of the mutual fund investor base now is 3 years old. That means they have seen one-way market. How they will behave when they see a 12 to 18 month sideways or a consolidating markets is yet to be tested. So don't take domestic flows for granted, on which the entire thesis and narrative is getting based on.
Pankaj, hi, good morning, and great to have you on the show. Good to be listening to your viewpoints. Just a word on thematics, right? Let me argue for the other side as well. Very true that people are chasing returns, but it's also the asset managers, right? Because that's where you can create new products. That's where you can bring new stuff to the market, add a little bit of marketing razzmatazz. So that's what's getting sold, and that's where the money flow is really coming in. But yeah, absolutely take your larger point. There is something to be a little concerned about, depending on how people are bifurcating their portfolios. But on to the point that you just made about this is the time to minimize risk and not chase returns. So let's talk about maybe profit taking. Nobody talks about profit taking. The time to sell, the time to lighten positions a bit. I know that across the mutual fund industry, I think cash levels have been rising 6, 7, 8%, some even higher. But at an individual level, where should one start trimming positions?
Surabhi, I think one regime change which we are seeing in the market over the last few months is that momentum and value, which was the classic trade for the last 2 years, 2.5 years, is slightly taking a back seat. And quality and some of the names on FMCG consumer are coming back. So that's a rotational trade or a regime change we are seeing in the marketplace right now. On the cash calls, I think from a risk minimization, I've always believed that cash is a double-edged sword. You can get one trade right one way, but to get both the trades right, it's a very, very difficult task. Maybe you may be very lucky. I don't possess that skill set at all, and I'm very realistic about my abilities in life. And I believe that portfolio construction is the key to survival in the markets. Over a period of time, nobody can predict future. I think Fed doesn't know what the interest rates will be or inflation. I think only thing which is in our control is our own temperament and emotion. And the second thing, how we construct a portfolio. At this stage, I believe that a concentrated portfolio could be at risk. I think a diversified portfolio across sectors and stocks and across good quality companies should be the order of the day. We should be taking out money from companies where there has been excessive valuation, where there is narrative at play. Many places we have seen that, markets are pricing in irrational exuberance out there in terms of expectation. And clearly, if you do a reverse DCF in many names, you will find that the valuations you can't justify. So I think rather than getting carried away by the momentum at the near place, we should take a fundamental call and trim positions where the valuations are in exuberance there.
But I know, Pankaj, I know you can't get into stocks, but at least name the pockets, for the benefit of viewers. When you say excessive valuations, pricing in the moon and back, what are you referring to? Is it capital goods? Is it defense? Is it PSUs? So some idea and some hints that, viewers can perhaps hold on to.
So Surabhi, look at this data point. This railways and defense combined market cap is 18 lakh crores today. 5 years back, this market cap was 1.2 lakh crores. So from 1.2 lakh crores, you have gone up to 18 lakh crores, which is 15x, which means 67% CAGR over the last 5 years. When you look at the profit growth, it's about 21% CAGR. So you have clearly seen expansion on multiples led by various narratives and delivery by the companies. But is it very high? Because finally, most of these businesses depend on one customer, one policymaker. Should it demand such kind of valuation is the question we need to ask. So I believe that there are certain pockets like this. I'm giving you one example where from 1.2 lakh crores, the combined market cap has moved to 18 lakh crores. Profits have not kept pace. They are at 20% CAGR. Market cap CAGR is 67%. So similarly, in many other pockets, probably when fundamentals, stock prices are running ahead of fundamentals, we need to take a reflection and try and trim position and manage risk out there. These are the pockets where I mean by excessive valuation.
Okay, very, very helpful. Thank you so much for spelling that out, Pankaj. I think it's it's important to listen to prudent voices at this point in time and not get completely carried away. Great having you on the show. Thank you for making time for us this morning. Well, that's a view from Pankaj Tibrewal. The market, meanwhile, has turned negative. Just keep an eye out on the screen as well, about 35 points lower on the Nifty. And the banks are not really stepping up. That's the issue. The Bank Nifty is falling. Some of the financials that had rallied yesterday, they're correcting. So right now, it's a bit of a sell down that we are looking at. Well, let's continue with the corporate conversations then. The next company on our radar is Reach Shipbuilders. The stock has surged more than 100% this year so far. The company has reported a strong set of numbers for the first quarter. Revenue growth has been quite robust. Margins, of course, dipped a little bit in Q1 because of the high cost of materials. So to talk about the business outlook going forward, we have with us PR Hari, Chairman and MD at Reach Shipbuilders. Mr. Hari, thank you so much for joining in. Great to have you on, sir. So I'll start with the guidance that you've spelled out, and it's sort of 25% growth. I think that's what you're expecting this year. Let me just quickly rewind back and check the order book. I think as of June, you told us that your order book was just above 25,000 crores, 25,200. So tell us now, we're in the second quarter. How aggressive is the bid pipeline? How much will you grow this order book by? And are you still confident of delivering 25% revenue growth?
Morning, Surabhi. Thank you. Yes, our order book currently stands at 25,231 crores. And 90% of this order book comprises of shipbuilding orders. That is our main business vertical. And balance 10%, around 10% come from our other verticals like marine diesel engines, ship repairs, and so on. Now, when we started the financial year, our order book was 22,600, approximately 22,600 crores. And the order book is actually increased. Now, this order book, I'm just coming to the shipbuilding segment. This order book of shipbuilding comprises of 29 platforms for 10 projects. 4 of these projects are being executed for the Navy. And the balance 6 projects include 3 export orders, including for a commercial order that we got from a German client. Now, this is the current order book. In the next 3 to 6 months, we are in the negotiation stage for concluding another 4 contracts for 20 platforms. This is the short-term future that I'm indicating. Now, we also bid for the next generation corvette project for the Indian Navy. This is a very, very high-value order. The total order value is a 8-ship project, and the AO in itself is around 36,000 crores. And we expect the bid results to be declared in another 4 months. In addition to that, the Navy is also expected to come out in the next 1 year, RFPs for 2 multi-purpose vessels. And the Coast Guard is likely to come up with an RFP for 6 next-generation ocean-going patrol vessels. So I've just given you an overview of our current order book and also what is likely to be in the immediate future.
Right. Got that. Mr. Hari, hi, good morning. Prashant here. There's a lot of things to get our head around. So let's just take it one by one. When you say platforms for our viewers, you essentially mean ships, vessels?
Yes, absolutely correct. Ships. When I said we are building 4 platforms for our German clients, that means 4 multi-purpose vessels for a German client. And similarly, we are To answer your question, yes, platforms means ships.
Okay, because I mean you do frigates and ships, I mean all kinds of things, right?
Yes.
So just a quick thing. So you're saying in the next 3 to 6 months, you are close to concluding orders worth how much? What is the size?
The size is approximately between 1,500 to 2,000 crores.
Okay.
Contract negotiations are currently in progress. We have been declared L1, and we expect a conservative time of 3 to 6 months for conclusion of these contracts. These include an export order also.
Got it. 1,000 to 1,500 crores in the next 3 to 6 months.
Between 1,500 to 2,000 crores. The negotiations are currently in progress.
Okay. The bigger one is going to be that corvette negotiations with Navy, right? Which you said in totality is about 36,000 crores.
It's a 8-ship project. In totality, it's around 36,000 to 36,000 plus crores. And this order will be split between 2 shipyards, with the L1 shipyard getting 5 ships and the second shipyard getting 3 ships. So we stand a good chance of getting this order, considering our experience and expertise in building corvettes.
So 6 and 2. 6 and 2.
5 and 3.
5 and 3. Okay. But so you will get something, right?
That's what we are expecting.
I mean, you could get 5 or you could get 3, but you are assured of.
We'll definitely be targeting 5.
And this will conclude this year in FY25?
See, in a normal order processing stage, from the time the L1 is declared, then the contract negotiations happen. So I don't expect the contract to be signed during the current financial year, maybe in the first quarter of the next financial year.
But sir, just to complete this order book picture, how much of the order book is naval right now as a percentage? And now that this big contract is coming up, I mean, realistically speaking, how will that number move? Just trying to understand. And then you're doing ocean-going vessels and platforms, for instance, for this German entity. So just want to get the order book mix between naval, non-naval, and some of the export orders to understand where you get better margins. I'm guessing some of the export orders fetch you better margins?
See, I'll just give the approximate breakup now. As I mentioned, our total order book, around 90% of the total order book comes from shipbuilding. Of this 90%, if you just take the shipbuilding orders, around 85 to 90% still come from Indian domestic war shipbuilding orders. That is our primary focus. I'll just give you from a different perspective. Now, you see a commercial ship of 10,000 ton, let us say, displacement, and a warship of 1,500 ton displacement. The order value for the 1,500 ton displacement warship is going to be at least 4 to 5 times more than a commercial vessel. But commercial vessels, definitely the margins are more, and the number of commercial vessels, the platforms are likely to be more. So it's a balance between both. To answer your question, around 85 to 90% of our shipbuilding order book is comprising of domestic war shipbuilding orders. That is both from the Navy and the Coast Guard. Currently,
and is that likely to sustain, sir? Is that likely to sustain at that high level?
Absolutely.
In the next, let's say, next 1 to 2 years, we shouldn't expect a change in the mix, right?
No, we don't expect a change in the mix. Maybe I would even take it further. By next 1 or 2 years, I will take it to the next 5 to 10 years. The same ratio is likely to maintain.
Okay, all right. Hi, Mr. Hari. Good morning. Let's get a couple of numbers out of the way. Last year, you did around 3,600 crores. So this year, you end at around 4,500 crores. Would that be a fair estimate? And also, I wanted to reconfirm that because you've had such a strong start to the year. And what is the margin we should work with?
Thank you, Nigel. Pleasure interacting with you again. Yes, I had mentioned that we'll be maintaining a CAGR of around 25%. We're very confident of maintaining a similar growth. In effect, what you're telling is correct, plus whatever figure you mentioned, plus that figure we'll be able to achieve. As far as the margins are concerned, as what Shriram brought out, there has been a slight dip in our margins, but we are very confident of maintaining margins that we had, PAT margins, what we had indicated earlier, plus 8% in the coming quarters and years.
All right. So PAT margins would be at 8%. Got it. Mr. Hari, also if you could tell us what is the current utilization levels? I recall you telling us that the shipbuilding capacity was around 20 warships and you were looking to increase it to around 24. Has that happened? And what about the capex that you'll be incurring for this year?
Thank you. Very interesting question. Yes, I wanted to make a statement that our shipbuilding capacity was 20 ships, but considering the current order book and the expanding number of platforms that we are going to execute, we have invested, we have done capital infusion and enhanced this capacity to concurrent construction of 24 ships. As of now, our current construction capacity is for 24 ships. What we also done is segregated the ship repair operations out of our physical premises. We have taken a facility outside our premises and we are doing a complete ship repair operations from that facility. In addition, if we get more orders, we also adopted and successfully adopted a strategy of public-private partnership where we utilize the spare capacity of capable shipyards to undertake construction of ships. As far as capital infusion, yes, we have been steadily pumping in capital. We had undertaken a massive infrastructure augmentation during the mid-2015, 2020 period. After that, every year we infuse capital in a strategic manner, which means basically to revitalize the facilities, procure new equipment, new technology equipment. So steady capital infusion is happening and current capacity stands at 24 ships, 8 large and 16 small and medium ships.
Right, and this will stay at 24 after the expansion, Mr. Hari, right? I mean, this is,
No. Again, an interesting question. What we felt was we will go in a phased manner. We have also taken a facility or a strategic partnership on the West Coast, which currently is not utilized yet. So what I mean to say is that 24 ships within our premises, ship repair facility completely segregated, public-private partnership both on the West and East Coast. And we intend increasing this capacity in the next 3 years to concurrent construction of 26 ships. That is captive facility.
In the next 3 years to 26 ships.
That is within our premise, affirmative.
Got that. Just two other brief questions on the revenue thing, just to stretch that time horizon a little further. I think you had indicated you intend to get to 10,000 crores in revenues by FY28. I mean, it's a slightly away target, but you will have visibility for that. Are you sticking with that as well?
I would like to make a very slight correction. What we had mentioned was to touch 10,000 by 2030. That is our stated vision, to touch a revenue crossing 2030. And if you just see our current order book, the current order book, including the small orders that are on the anvil, I mentioned about 1,500 to 2,000, they all will get exhausted by 2029. And if we get the next generation corvette order and a couple of big orders that are coming from the Navy, we will definitely be able to cross 10,000 threshold by 2030.
Okay, all right, fair enough. Got that. And you've also started. You got into weapons manufacturing. Is that? How do you see prospects for that, or do you think it'll largely be shipbuilding and ship repair, or is it a fast-growing segment?
See, yes, it's true that we have got into manufacturing of weapons. This is a segment that we see opportunities. Adequate opportunities in the future, but our primary focus, I repeat, will remain on domestic warship building with ship repair as a subsidiary segment. Considering that weapon manufacturing is an attractive area where the returns are likely to be high, we will provide adequate impetus on this area also. We expect more orders on this segment in the coming years.
All right, we'll leave it there. Thank you very much, Mr. Hari, for joining us, and it's always great speaking with you. Thank you very much for being here on CNBC TV18. Markets down about 35 points now, and we're at about 24,980 at this point in time. I mean, Garden Reach is up about 0.5%, but it's come off from its highs of about 2,800 to the 1,700 levels, where it is trading, 1,800 nearly, where it is trading at this point in time. We'll take a quick commercial break here, and we'll come back with the management of Gravita India. That's the next management. Interesting conversation with Naveen Prakash Sharma, ED of the company. Stay with us.
Welcome back. Well, keep an eye out on a few stocks. There is this buzz or this hope that NSE will list in the future. And that's why you have IFCI. I think you normally have a sentimental rub-off out there. So that stock as well is spiking up. It's moving on large volumes. I'm presuming it has something to do with this. And also you have New India Insurance. I'm just looking at the shareholding pattern. And they have shares worth close to around 4,000 crores at current reckoning. So that's another stock that you should be keeping on your radar. It explains why that stock is spiking up as we speak. Up close to around 2% or thereabouts. They have roughly around 70 lakh shares. And at current market price, well, it could be worth close to around 5,000 crores. So a couple of these names are moving. I think GIC as well has some stake in the company. So IFCI, you have New India Insurance, GIC, all of them buzzing a little bit as we speak at the high point of the day. Well, Gravita, that's the stock in focus. The street is bullish on recycling industry. The stock has surged more than 90% in this year. In fact, Motilal Oswal, they've initiated coverage on the stock with a buy rating. To discuss this and more, we're joined by Mr. Naveen Sharma, the ED of the company. Hi, Mr. Sharma. Good morning and good to see you. And as always, well, give us a couple of basic numbers first. There are a lot of triggers, a lot of industry tailwinds as well. What's the volume growth you're looking at for this year? And break it up for us, how much you're expecting in your core business, which is your lead business and the non-lead business.
Morning, Nigel. We are growing with a volume growth of almost 25% CAGR, and that will be a rolling average for next 4 to 5 years as well. While on the PAT side, we are going at the rate of 35% CAGR. Currently, our lead business is almost 88% of the total, which we plan to reduce in time to come to 70%. And we are also entering in rubber recycling, lithium battery recycling, and also increase volume in non-lead like aluminum recycling business. So altogether, we will keep continuing this rolling average of 25% CAGR volume growth in time to come.
Mr. Sharma, from 88%, lead will come down to around 70%. By 70%. When? Because I recall you telling us steel and the iron business, that will gradually come in, I think, in the next year itself. That's for FY 26-27. So by when does it come down to 70%?
Right. So it will be coming in next 3 years, the steel and paper business, but the other business, rubber recycling and volume growth, which is coming in aluminum business and lithium business, that will certainly reduce these number initially to 80% and later, maybe third and fourth year, it will come down to 70%.
Got it. All right. How big can the aluminum business scale up to, Mr. Sharma? I ask you this because one of the triggers is aluminum alloy derivative is to be launched on the MCX. Explain to us, how does this benefit you? Maybe, the raw material you procure and then you can hedge it at the current price itself once this is launched. Explain to us what is the benefit and how big can the aluminum part of your business become?
Right. So this aluminum business has an equal potential to grow like lead business. And when it comes to aluminum alloy derivative on MCX, this will certainly help in price discovery for auto sector. As of now, because auto sector uses secondary aluminum alloy only, 90% demand from auto sector is of the secondary alloy. And most of the raw material is from import. So as of now, a recycler cannot hedge their material. Auto ancillaries or OEM cannot hedge their raw material supplies. So it will help three ways. Auto industry can hedge material. Recycler can hedge their raw material scrap, which they are mostly importing. And there will be price discovery as well. Because as of now, being a secondary material, there is no such price discovery and there is a various variations in the price. And one more interesting thing, Nigel, which is coming in this sector is EPR on non-ferrous metal. Government of India has announced that there will be a draft rule from April 25, wherein aluminum, copper, and zinc, three metals will also come under EPR. So there will be a mandatory 5% non-recycling material content in the finished goods. So it will increase a demand of around 200,000 tons of aluminum from the secondary segment. So it will also give value addition for the secondary material as compared to primary materials. So altogether, I foresee that this segment will grow with the help of EPR on non-ferrous metal by hedging through MCX by launching this derivative of aluminum alloy.
What is the capacity currently in the aluminum part of the business? 70,000 approximately, and you're expecting to increase it by multiple times. So where is it headed?
So as of now, our capacity is around 40,000 tons, and we can certainly increase in no time because we have an in-house facility for adding capacity. We have our project division, so we can add it to 70 or 80,000 in 2 to 3 years based on the outcome which is coming by way of EPR and MCX derivative launch.
Okay. Right. Mr. Sharma, hi, morning. The markets, of course, have loved the story of Gravita because stock is up. Stock has doubled from May of this year, basically in the last 3 months. It's a doubler, so one of the best performers. Could you tell us, just two basic questions for the uninitiated who've not really followed the stock that much. Have there been specific regulatory changes which have kind of driven a marked shift for you and acted as a tailwind? And second, what are some of the risks, since you are in the recycling business, which is, of course, what needs to be done, recycle and reuse. So these are big buzzwords around the globe. But are there any risks as well on the regulatory side as you see it? Go on, sir.
Hi, Prashant. So basically, of late, there are various regulations which has come. Government has come with EPR, battery waste management rules have come. So lead business has grown multifold because of that. Parallelly, government has come on tire recycling policy, tire waste management rule, plastic waste management rule, oil waste management rule, and e-waste management rule. So all these rules have shifted a lot of, we were telling always that this sector is informal sector to the extent of 65 to 70%. So there is a great shift from informal sector to formal sectors. So, and Ministry of Environment has brought various regulations, and they are also bringing, as I mentioned earlier, that they will bring the same regulations of EPR on non-ferrous metals. So it is altogether a sunrise sector, and with these regulations get implemented, EPR penalties or ECs are being implemented, it will grow multifold. So I do not foresee any such other threat to this industry, though this is being a hazardous waste. So we, being a technology provider, also have edge over other competitors because we have in-house technology and we are exporting our technology of recycling to various countries. So we do not foresee any threat to this sector, and it will keep growing because of ESG requirements, sustainability, and zero carbon regime which is coming in time to come.
Okay, all right. Final question, sir. We're running a little short on time, but help us out with a few details. What is the current consolidated EBITDA per ton, if you can help us out with that number? And what should be the margin we should work with from here on?
So in rupee terms, it is 15 to 17 rupees a kg, and in percentage terms, it is around 9 to 10%.
15 to 17 rupees per kg, where is it headed?
It will be headed with the growth of around 8 to 10% as we add to value-added products further, because as of now our VAP product is 42%, which we plan to go into 50% in time to come.
All right. We'll leave it there. Thank you very much for joining us. Appreciate you being here, and interesting business, and you've got all the tailwinds going for you. As they say, the stars align, and they have aligned for your business, and it looks pretty good. At least the overall argument that you can make for the business and the continued growth, I think, remains pretty solid. But stock's done very well. As I said, 3 months, stock's doubled. Shriram Finance is the next management of the program. The stock has surged more than 60% this year. Again, for Shriram Finance, the last year and a half, 2 years have been a story of complete re-rating. Citi, the brokerage, is a buy rating of the stock. They believe Shriram Finance is defying seasonality and peer trends. Let's talk more about this. Mr. Umesh Revankar is Executive Chairman of the company. He's with us to take some questions. Mr. Revankar, good morning. Thank you very much for your time, sir. Prashant this side. As we always do, talk to us a little bit about how the quarter so far is panning out across segments for you, sir. Better than what you thought, what we spoke about at the end of the last quarter, or in line? And if you can sort of help with some numbers, that'll be helpful.
Good morning. This quarter, if you look at the business growth, or rather the credit demand, July was little, we had certain headwinds because of excessive rains in certain location. But August, it is improved. So the monsoon is spread across, and that's really helping the credit demand has improved, plus sentiments have been very positive. So I believe the September would become much better. And also the festive season starts with Ganesh Chaturthi. And normally it's the indicator. Ganesh Chaturthi is time where people do buy new vehicles or new machineries in certain part of the country, not everywhere. Some people postpone it till Dasara. But I think Ganesh Chaturthi being the first week of September, we should be able to do quite well. So to some extent, that manage the July numbers. So overall, I think the numbers are much better, and it is, I think, it is continuation of the first quarter.
Okay. Morning, Mr. Revankar. I'm coming back to the growth numbers in just a bit because the La Nina seems to be really working in our favor, at least the August rains seem to indicate. But what about the cost of money? That seems to be the real rub, isn't it? Has it increased for you, or has it not increased because the CP market doesn't seem to be affected?
No, cost has not really increased. If you look at our first quarter number, we did had Q on Q, there was improvement in cost of borrowing, in the sense it was around 15 basis point improvement. So the same trend is continuing this quarter also. We are not seeing any challenges in raising resources, and it is quite...
No, if you could just explain, the Reserve Bank had increased risk weights on bank loans to NBFCs. Are you saying that that was not a problem because you didn't go to the banks at all, you picked it up from the market? Is that why? How is it that you were not affected by the rise in risk weights?
See, basically what happens is, depends upon the individual NBFCs. Many of the NBFCs became over-dependent on bank. So maybe 60-70% of their borrowing or liabilities were coming from bank. But in our case, we were not. So we have equal spread between a capital market and we are a deposit-taking NBFC. Plus, we are able to raise from the bank, and private sector is one area which we are able to create portfolio and do the securitization. So we are very comfortable as far as the raising resources are concerned. So it is not really going to have any impact on us because we have wide sources of raising resources.
Sure. Sir, just to go back to the point on growth, and you're sounding very optimistic with the onset of the festive season. I think you're looking, correct me if I'm wrong, but I think you're looking at 15% AUM growth this year. Just break it up into segments as well, because the MSME segment was really fired up for you, but gold loans are also doing well, two-wheelers, passenger vehicles. I mean, a lot of sectors are really fired up. So how do you expect the trends to be? And this growth is coming, at least as of Q1, at very steady asset quality. So just expand on this. I mean, the growth number, and whether at the margin you're seeing any concerns in terms of delays or delinquencies at all, because we're hearing that from some segments like MFI, etc.
See, basically what's happening is, as far as MSME and gold is concerned, we are reaching to new geographies, because earlier these facilities were mostly in the south and were not much in the rest of the country. We are creating the facilities, or we are reaching out to more bigger geography for MSME and gold. So naturally, the growth will be higher year on year for us, because we are adding more number of outlets for this activity, and it will keep growing. And the two-wheeler part of it, two-wheeler is growing at a double digit, 12 to 15% year on year. And that is also helping us. Both units and price both have increased in the two-wheeler. So that's definitely help us to grow more than 15%. And as far as the passenger vehicle is concerned, there is a lot of activity happening in the private participation in the public transportation, because the investment by the PSU, that's not PSU, public sector, that is the government investment in the transportation is coming down over the period, and therefore there's more demand for private people participating in
private
the
cars.
transportation. So that is helping us to grow. So these are all natural growth that's coming into the business.
Got it. So it explains the numbers and you're still confident. But just the latter part of my question was, are you confident of continuing these growth rates at pristine asset quality? Because, I think your NPAs did not budge at all, about 5.4%, 5.39 gross NPA. Will it remain here, or can you be, even more confident of maybe even lowering NPAs by the end of the year?
The gross stage 3 would definitely improve from 5.39 to further. What happens is the entire environment has been very positive. Over the last 5-6 years, if you look at the more adherence to the credit bureau numbers, and everyone is getting tracked, everyone has some credit score. And also there is a discipline built. And when we move from 180 days to 90 days, we have been able to communicate to the customer. And every stage improvement has been communicated to the customer. So customers have been a little more financially more disciplined than what they were earlier. But even then, the credit cost for us were around 2% earlier. It will improve by around 10 basis points now. That's all. So there is not big improvement in credit cost per se. But if you look at the gross stage 3, where the awareness was more important to the customer, that has been provided. And therefore, it is improving Q on Q. I think it will continue to improve for at least another 2-3 quarters because environment has been very positive.
Got it. Mr. Revankar, would you want to up your growth forecast then? Even in the first quarter, you did 21%, although you guided for 15%. And now you let it slip that you will do more than 15%. So is it closer to 20%? What can we work with?
It will definitely more than 15, but I don't want to put a number on the growth right now. But definitely it should be around 20 because we have been growing. In first quarter being good, it should definitely help us to grow at that level.
Okay, I wanted to ask you, the governor made a reference to this unified lending interface. I mean, he's basically speaking about account aggregators now, coming online. Has that made your asset quality superior, your due diligence superior? Do you all use account aggregators?
No, it is a work in progress. We are yet to start using the same. But I think it is going to take time, and it is because this kind of information being available, typically if you look at the fintech companies, they were providing this additional services and along the account aggregators. Now, the usage of account aggregator and sourcing the information from them is something which we have been doing, but not the fullest extent. So that will make, one thing is using this, information and building your credit rule engine accordingly. That's one part of it. And the second is the personal interface, what we have with the customer. That is also very important. We believe we need to have both. We can't be just depending on one platform to focus on, because it's after all, you are not just distributing, you are underwriting alone. So that's very important.
No, God. Yeah, I get your point, sir. Personal interface, which you all have built over the years, will be most important. Very quickly, we are being told to wind up. So just 2 numbers. What kind of a margin guidance can you give us? And what kind of credit cost guidance?
The margins in the first quarter, it was 8.79. We should be anywhere between 8.8 to 8.9. That should be the margin. And credit cost, we should be just below 2%. So maybe 10 basis point lower than the 2%.
All right. This is going to elate your investors. Thank you very much, Mr. Revankar, for joining us, and a very happy festive season for you. It's kicking off in the first week of September.
Thank you.
All right. Interesting chat there as always. Mr. Revankar, thank you for joining us. We'll take a quick break here. We are back. Commodities in focus with Manisha when we return. Stay tuned. All right, welcome back. The market's down about 20 points, so it's very, very quiet. Mitesh Thakkar is with us with what he'd want you to do in terms of individual trades. Mitesh, morning again. What's popping up on your screen? What trades? Tell us.
So, Prashant, I have IOC as one of the recommendations. I think that's doing well after about 4 or 5 days of sideways activity. Buy here with a stop at about 172.5. Look for a target of around 183. And the other one is Biocon, and I would want to see this stock get past 360. While the chart is good, there's some good call option of concentration at 360, and today's high is about 360.5. So I would recommend a buy here about 360.5, and then keep a stop at about 353 and look for targets of 380.
Okay, all right, Mitesh got that. Thanks very much. Well, with that, let's head across to Manisha for a roundup of all the commodity market action. Manisha, what's catching your attention today?
Well, it is sugar, because after a very long time, we have seen the prices rebound very strongly. So when you look at the global markets, there we're trading at a 6-week highs, and the raw sugar prices have gained up by nearly 11.5% in matter of last 1 week itself. Well, if you look at the prices itself, we did see 17.5 of a low in the previous week. Prices are trading at a 19.7 right now. So that's the kind of jump up that you've seen in case of raw sugar prices. Of course, from the high of this year, which has been 24.5, we still are much on the lower side there. But the fundamentals really seem to be turning around now. One, there is massive fires in Brazil, which is also the largest producer or exporter of sugar. Almost 25% of world sugar comes in from Brazil. And the crop damage in Sao Paulo really seems to be impacting the prices there. The expectations are that nearly 2,000 fire breaks have led to 60,000 hectares of planted cane impact there. The yields can continue to decline there. As of now, the initial estimate suggests that 5 million tons of cane perhaps could have been impacted because of this. And it's not just about Brazil. You have severe weather also in Thailand, which is also the third largest producer and second biggest exporter in the world. So the Thailand yields could be the lowest in last 13 years, also have had their premium come back in case of prices. Come to India then, and the sugar crop is estimated quite on the stronger side this time around. Monsoon is 3% above normal as of yesterday, and that has been supportive for the Indian markets as well. When you look at the crop estimates for 2023-24, the reserves have been higher side at 9 million tons. There's an excess crop of around 3.6 million tons, which the industry has. And remember, India is not exporting. So while we did export a record quantity in 2022 at 11.1 million tons, it has been 6.11 in the season of 2022-23. And India has restricted exports since October 2023. So the markets will continue to look at those numbers as well. Going forward, when you look at the global markets as well, the expectation from USDA is that we are looking at record numbers across. 2024-25 crop is estimated at 186 million tons, which is a record. Consumption is anticipated at 179 million tons, which also is a record. And the closing stock is expected at the 13-year lows. So these are some facts and figures which also seem to be supporting sugar prices in the trade today.
Right, Manisha, thank you very much for that. We'll take a quick commercial break here. On the other side, it's our segment. It's the economy. My colleague Lata will be speaking with Rajesh Kumar, MD and CEO at TransUnion Civil, to discuss retail loan trends in banks and NBFCs. Stay tuned for that conversation.